Hey, what's up everybody? What's going on? It is Thursday, October 7th. So the market was up today, but off its best levels. Folks, listen. I don't know if you know this, but right now, the forecast for third quarter GDP has gone all the way down to 1.3%. 1.3%. I mean, we were 6.5% in the second quarter. GDP for the third quarter now, and that's annualized, 1.3%. And folks, the third quarter doesn't even reflect the current fiscal slowdown that I've been talking about, which raises some pretty serious questions about GDP growth for the fourth quarter and for the year. You know, we could be near zero. We could be negative. Right now, the average daily flow, fiscal flow, is like 17.5 billion. I mean, we're looking at 350 billion month. Back in March, it was 984 billion for the month. Then we went down 700 billion, 700 billion, 700 billion, 600 billion, 600 billion. We finished September at 576 billion. We're running around a 350 billion per month. I mean, that is a serious deceleration. And that explains the third quarter. I mean, that was shocking to me when I saw that forecast. That's from the Atlanta Fed. 1.3% growth. And again, that does not even reflect the current fiscal slowdown that we're in right now. By the way, as of this video that I'm making right now, which it's it's about like 10 minutes to 6 here on the East Coast. The Senate still hasn't voted on that, patch, whatever you want to call it, on raising the debt ceiling, that deal that they had yesterday. Apparently, there are a lot of Republicans who are mad at Mitch McConnell for making that deal. Now, I think they're going to vote on it. But again, that only carries through early December, December 3rd. All right? And that's not necessarily going to have any impact on the current level of fiscal flows that we're seeing right now. I mean, Yellen's making all the payments. It's not like she's not making payments and that's why we're down. The only payments she's not making right now are contributions to the government employees retirement account or something like that. So yeah, 1.3% for the third quarter. Wow. Now, a lot of you out there, and I get these comments all the time. Oh, the market doesn't follow the flows. You don't know what you're talking about. You're stupid. You're crazy. That's not what it looks at. Or the market doesn't reflect the economy and blah, blah, blah. Okay, just wait. Just wait and watch. A 1.3, even if we stay at 1.3%, if we finish out the whole year, the fourth quarter, and what I'm saying right now, that this slowdown in the fiscal flows that we're seeing right now doesn't further impact negatively in the fourth quarter, let's say that doesn't even happen, where the market is right now, that is way, in my opinion, that's way too optimistic. Way too optimistic in terms of, what the market is reflecting in terms of economic growth, and more importantly, what it's reflecting in terms of corporate profits. Now, we know how Wall Street works. We know how these corporations, they're very savvy when it comes to reporting their profits, because they give guidance. And they pretty much always hit their guidance, or they even go above their guidance. It's a game. They know how to game the system. But the way they game the system is through fancy accounting or cost cutting. And I said this before. What is the easiest way for corporations to cut costs? They lay people off. So we're going to start to see, look, we've had a pretty good run in terms of, you know, watching the unemployment rate come down and watching weekly unemployment claims come down. It came down again today. We had a 315,000 claims number. But keep your eye on that. You know, it takes time for the economic slowdown to kind of percolate through the economy and force businesses to adjust. And again, one of the primary ways they adjust to slower growth and the need to meet those earnings forecasts, otherwise they get punished brutally by Wall Street, right? The stock gets clobbered. No CEO wants that because they want their bonuses, they want their stock options, they want to look like heroes. So the easiest way to do that is to lay people off. We're going to see that. I mean, when you go from a 6.5% growth rate, that's like China growth. And by the way, I said this last year. All right? I mean, you could go back if you were able to find some of my videos, but I mean, where I stated this. I said that with the fiscal stimulus that we were getting off of the pandemic, these were my exact words. We're going to see China-level GDP growth, like 6.5%, which is exactly what we hit. I said we're going to see China, level GDP growth. Again, for all of you out there who think I don't know what I'm doing because I follow flows and you're smarter than me and that flows don't mean anything, I predicted the 6.5% GDP growth based on these fiscal flows. By the way, somebody asked me, hey Mike, where do you find these fiscal flows? Dude, folks, they come off the daily treasury statement, but you have to know it takes a little calculation, a little arithmetic. No one had to parse through the numbers. I sell a course on my website called Understanding the Daily Treasury Statement. It is a video course. It's 99 bucks. You can track these things for yourself every single day. Spend the 99 bucks. Invest the 99 bucks and learn something, okay? Or, better yet, you could subscribe to my service, MMT Trader, where I keep people updated on this like every single day. Every single day. In emails throughout the day, in my main report that comes out every Monday. I mention it here every Monday. The report comes out every Monday. So yeah, that's where we are, man. 1.3%. And that does, again, I'm going to say this, it does not even reflect the current fiscal environment that we're in right now. Look, 17 billion a day, that is half of what we were seeing in August and early September. So it has dropped substantially, 50% reduced from. Now, I don't think it's going to stick around at 17 billion. It'll pop up into maybe in the low 20s, but still. That's a big reduction. We were doing 35 billion a day in August of flows. It's big. So again, I don't think this rally is this 2-day rally we had is gonna last. One of the things I want to check out, and the data is not going to be available until tomorrow, is, we got to see what's going on with the banks. By the way, I mean, I've been bullish on the banks for so long, on bank stocks. And they've been doing really, really well. I think JP Morgan hit an all-time high today, if I'm not mistaken. And way back last year, I was pounding the table. I kept saying, you got to buy the banks. They're the most undervalued stocks in the entire stock market. And everybody's like, no, you can't buy the banks because the economy is shit. And, how are they going to make money? I said, look, the banks are they've never been as well capitalized as they are now. I mean, the only thing really holding back the banks and bank stocks from just like blowing through the roof in a parabolic way is this situation, this ongoing situation we still have with reserve balances piling up on the bank balance sheets, where the Fed, I've explained this so many times, they got to do these reverse repos, or they've opened up this facility to the banks to offload cash Because it's, you know, there's a lot of you out there that think, oh, they lend the money, they lend the reserves. No, they don't. They maybe lend the reserves to each other overnight sometimes when there's, you know, a liquidity issue or one bank needs to have some excess reserves to meet requirements, but they don't lend the reserves to you. The loans themselves create the reserves. Actually, that's a good topic for another video, because I had people telling me, no, Mike, that's not true. That's not how it works. Yes, that is how it works, and I'll explain it one time in another video. So yeah, that's where we are, folks. 1.3% growth. That is really weak. Fourth quarter could be even worse if we stay at the current fiscal flow rate that we are right now. Go to my website, get that $99 course. It's called Understanding the Daily Treasury Statement. Learn something. I say this every single time. Learn something, elevate yourself, get some knowledge, learn how to apply the knowledge. You know, people say, Mike, I can't afford the service. You know, I got laid off, or I don't have enough money. Make money. Learn how to make money so you can be self-sufficient. I'm giving you information. I'm giving you knowledge. I'm teaching you how to apply that knowledge. It's not just MMT. It is applied MMT. Nobody else has that. See you tomorrow. Bye.